these kind of old categories on something that where the point is to be decentralized. And it's not to, you don't have a headquarters, you don't have a CEO, you don't have a board of directors, you don't have anybody that could file a 10K form or send out 1099 forms. Who's going to do it?
Right. So with all of this, you don't have necessarily P&L statement. So like I was saying at the last podcast when you weren't here, is that Michael Saylor now has 1 million valuation on Bitcoin. So my question was, how do you put valuation on something which doesn't have all of those above things that you have mentioned? There's no P&L, P&E statement. And I understand that one way to measure value is network value, but it's a very convoluted and complicated way, of course. And so if you look at Bitcoin...
Why is it complicated?
Well, because it's extremely...
I mean, how do you value Visa, the company?
Well, price to earnings versus interest rates.
It doesn't matter in the end. I'll tell you, not for Visa. The thing that matters for Visa more than anything is one, I said several things. One, how much they get per transaction. One. Two, what their cost of a transaction is. And three, how many transactions they do. What's their transaction volume? Those are all, in the end, the only things that matter for Visa. Those are the three underlying things that mean everything to Visa. And it's basically, you've got those same metrics for Ethereum, for Bitcoin, or for any other. Well, you've got the cost of a transaction, you've got transaction volume, and then...
But there is profit. So what is the profit with Bitcoin? There is the transaction, there is cost of the transaction, but what is the profit on the transaction? It's...
What do you mean a profit?
The PE statement for a Visa, it has the profit. It charges, let's say,
but that's because
it charges $1 on 100 and its fees are 20 cents. So it makes 80 cents for each transaction, just hypothetical. So
but that's because the purpose of Visa is run on behalf of its shareholders to pay them a dividend and to retain cash flow only when the investment can yield a better return than alternatives, right? And they pay out whatever they can't get that kind of return on out to shareholders, and shareholders get the return. Well, in the case of Bitcoin, it's different. You've got users, you've got developers, and you've got miners. In the case of Bitcoin, in the case of Ethereum, now you do have miners.
Let's even make it
simple. Let me finish my statement. In the case of Ethereum, right now you've got miners, developers, users, and you've got in the future you got stakers, people that are, and you already have that, and a lot of the there are already proof of stake chains where there are stakers, and so the staking is the equivalent of holding a stock and achieving a dividend yield on it, and so there's value in either staking or mining. There's a capital investment required for mining, and you get a yield from mining. It's a very well-defined yield, and so so there is a yield, and then two, there's a value in what essentially Bitcoin corresponds to a voucher to participate in the payment network. Same with Ethereum. Any of these platform coins are just vouchers to participate in the payment network. And if the payment network has value, which means there's enough people on it and there's enough opportunity there, then it'll be valuable. And if there's not enough users, then it doesn't have any value. But it's the same thing for any currency, by the way. Why do people not do a lot of transactions in Turkish lira or whatever outside of Turkey? It's because how many banks around the world hold Turkish lira to do transactions in it? They hold dollars because dollars are the world's reserve currency. And so the point is the dollar is a similar voucher to participate in the U.S. financial network, and just Europe, euro for Europe or whatever, and it's the size of the network is determined by the number of participants in the market, number of nodes, which in a currency market would be, the number of banks that have significant holdings, or the number of users, or the number of people holding it, and so there's really network effects apply to currencies as well, and even to stocks, and to platforms like Facebook. There are network effects, and that's how the original VCs, when they tried to value Facebook, they used Metcalfe's law and some of these other approaches to try to ascertain what the future value of it would be, because nothing like it had ever existed before. If we've got 100 million users, it's this value. If we've got 1 billion, it's this value. So that's what the, I don't think there's anything, in the end, there's transaction fees, which you can think of as it's the profit, it's the income that's being generated.
Miners.
You've got transaction volume, which is revenue, and you've got the market cap, and you've got then the size of the network in terms of number of users and so on. And the thing about Ethereum, why DeFi makes Ethereum much more valuable, is because it greatly increases the velocity of money, and therefore the churn and the level of transaction volume, transaction fees, and everything else is much higher on Ethereum than it is on Bitcoin. Something like 7-8 times the volume of transaction and transaction fees on Ethereum than Bitcoin. Ethereum is going to do transaction volume this year that's just a little bit below Visa's, which is the world's largest debit card processing company. And it's nearly a $500 billion company, which is bigger in market cap than Ethereum.
Okay, so it's just, there's a lot, right, in this whole thing. And Ethereum valuation is so much more complicated than Bitcoin. I agree with you. So let's just stick with Bitcoin for a second, right?
Well,
so
it's not more complicated. It's exactly the same. It's the same principle, just extended. And I think that the valuation for Ethereum is better than Bitcoin. But Bitcoin, itself has a value, but it's a much simpler network than Ethereum, because it doesn't have smart contracts.
Okay, so let's just speak of Bitcoin just for simplicity's sake then. So you mentioned that there is a value from mining, which I agree, but that does not translate to the value of the Bitcoin. If I have a mining company and I take in electricity and I have an efficient system and cheap electricity and I mine Bitcoin, I make money, of course, but that's a valuation of me as a miner. It has nothing to do with valuation of the Bitcoin. As a miner,
it's tied completely together. There's
no
ability to separate it. I'll explain it.
No, I understand that it's tied to the value.
No, I don't think. What is it? Why is the price relevant to the security of the network? Why is that? How is the price of Bitcoin? How does it ensure the security of the network?
It's not a direct correlation. I mean, clearly the price of Bitcoin has fluctuated from
but no, the price, I'm talking about, average price over a month or over a week or whatever. How does it ensure the security of the network?
It doesn't. The network is just as secure.
Well, then you need to read the Bitcoin white paper, because the point is that the price is absolutely critical to ensuring the security of the network. Okay, because let's put it this way, that if the price were low, then there would be very low demand. Let's say the price of Bitcoin is $50 Bitcoin.
Okay.
Then you could come in, but there would be very low demand to mine it, because the profitability would be low. And and it would be even negative. So guess what? You could come in with all of your mining equipment, and you could mine the hell out of Bitcoin, and you could mine more than 51% of the Bitcoin. And that's what enables what's called a double spend. In other words, at that point, you are the consensus because you're 51% of the hash power. And so you could say anything goes. You could say, instead of there being 21 million Bitcoin, you could say there's 100 million, or there's only 10 million, or whatever. And you could change all of the parameters because you could create your own forks. So by the price being high, it raises the price of doing that, of attacking the network itself. And when it's really high, it makes that price unreachable for anybody. In order to mine 51%, I mean, you'd have to come up with, right now, you'd have to come up with trillions of dollars of capital to do that. And so the price is completely tied to the security of the network. There is no security of the network without a high price. And so there is an incentive to keep the price high. But by the way, I mean, because capital is finite, what this means is that there can only be a handful of coins that survive in the end. It means that there will probably only be one Bitcoin. And all these like Bitcoin imitators, like a Litecoin or Dogecoin or whatever, Bitcoin Gold or Bitcoin Cash, they'll all go away eventually. They're in zombie status right now, but they'll just keep declining slowly over time and be like, Translux, which, was a company that was a very hot company in the 20s because they made the tickers, with the ticker boxes, right? That would be put up in brokerage houses. And in the Depression, they somehow managed to survive in the Depression by making movie projectors. But then they, I think, just went bankrupt about 15 years ago. They were around for, like 100 years. And, they weren't a hot company anymore. They weren't in the Dow 30 anymore, even though they were back in like 1929. But they just managed to be this zombie company that survived, by switching their business here and there. And that's what the fate of most of the Bitcoin competitors are. There are Ethereum competitors, and I think that space is more complicated.
But hold on one second. So are you saying that when Bitcoin went down in price from 60,000 to 30,000, its security went down in half? It's just half as secure?
It doesn't, not in half, but it does drop. Yeah, not in half. There's a set of formulas that you can apply to quantify that, but it's not half. But yes, of course, it drops the security. It has to. It increases or decreases the cost of attaining a 51% majority of the hash power, which was never a threat, by the way, for Bitcoin, because 30,000 is still very high.
So which price level is the threat? What is the price after which Bitcoin becomes not a viable currency? If we could put a valuation on it, two questions. What is the price after which Bitcoin is not viable because it's not secure? And two, what's in your mind is the actual valuation of Bitcoin? Would you say it's 500,000, 1 million? Just what number? I mean, if you ask an analyst, what's the price of Apple, they could tell you, well, whatever this is.
Well, they don't know. I know they would tell you what they think the price should be, but they have no idea.
Right, but at least they could.
And if you've ever worked for a company, you know that the insights that analysts have are totally different from the way that companies actually work on the inside, right? And so my point is that they're guessing, and because there are about the valuation of companies, and because there are supposedly standard ways of valuing companies, like PE ratio, which doesn't really make sense, like when you have a very fast growing company or a very slow growing company. I mean, it only works for the sort of very this narrow middle of companies that are at moderate growth and so on. Only for them does it work, that are growing at the same rate as the economy as a whole. And for everything else, PE is a bad valuation metric.
Fine, you could just use
but I'm just saying
revenue.
But they use it because people are comfortable with it and they're familiar with it. And something like crypto assets being new, there aren't the same valuation metrics. And so people aren't comfortable. And there's not accepted definitions. And so these same analysts that are so confident that the P ratio tells them what the value of Apple should be or something, they don't have the confidence to put a number on Bitcoin. But the point is that it really depends on the future. I mean, in the end, the only thing that really matters is a kind of discounted cash flow type model, right? Of what the future value is and so on, and discounted in the future. I think that it depends on a lot of things, but given what I see, I think that a fair value for Bitcoin could be double where it is 5 years from now. And I think it will be volatile getting there, but I think that it could be a bit under 100,000 in 3 to 5 years. And I think that could be a fair value if indeed it continues to grow at the pace that it has. If indeed, there continues to be some adoption. I think though that the things but realize, I mean, that is well below what some people's expectations are. They expect another 10x, in the next year or something like that. I'm saying, that is basically doubling in 5 years, which is, like 14, 15% growth, right? Now it could go faster than that, but that's what my expectation is. But I think that where the growth is going to come in the market is in the smart contract platforms like Ethereum and competitors like, maybe to some degree a Solana, but I think, it's like to some degree Cardano, and maybe we'll see good growth in like Binance Smart Chain and Avalanche and some of the direct competitors to Ethereum, Algorand. I mean, they're actually well managed projects. I'm a little less hot on Binance, but like Algorand, Avalanche, Cardano, they're independent projects. They're not tied to an exchange. They are really well thought out, and they're not as far along as Ethereum, but they'll probably grab a slice of that space. But the valuations on those could be, 5 or 6 times higher in 5 years if they continue to get adoption. If the SEC doesn't shut, everything down stupidly and turn a growth engine in the economy into something where it's a wasteland because of they want to protect the banks or whatever. And so I think that the valuations could be quite a bit higher. But for Bitcoin, it's achieved its rapid growth, and it may be a slower growth, but still growth, depending on the adoption of crypto itself. Bitcoin is kind of, but I could see, if Ethereum goes up by 5x and Bitcoin doubles, then by the way, Ethereum is now a bigger coin than Bitcoin. And so I'm not saying that's inevitable, but it's something that could happen. And it just depends on the degree to which, okay, if enough financial institutions get involved in decentralized finance, and by being involved, they legitimize it, and the SEC, instead of wanting to shut it down like it's a circus or a casino or whatever term they use, but instead they just prosecute fraud and go after things that are egregious, like miscommunication to investors, which is an appropriable. If they take that path, then there's huge growth ahead, and it's an enormous investment opportunity. If they take a very adverse position, then no, it's slower. The focus shifts to other countries that decide they want to invest in this. And instead of that happening in 5 years, maybe there's a bear, but it's 8 years or 9 years. You have some realization that, well, maybe we went too far on that or something. And that has happened before. I mean, in the US, we've gone through several periods where the regulatory approach to approving new medicines became very adverse. In 2009, there was something like 19 new medicines that were approved, whereas in 2019, it was nearly 200. So what changed? Nothing. There was just as much innovation being done. There were just as many things being brought to the FDA and data submitted and so on, but it was a totally different regulatory approach. And so you had this period where there was very little, people that had a lot of medical problems or certain medical problems, they didn't have no treatments. And it was a very different situation 10 years later. We could see something like that in crypto too. And I wouldn't be at all surprised to see it.
But is there any chart or graph or correlation to see how many people use Bitcoin versus its valuation? Because I don't think the Bitcoin usage from 10 years ago grew as much as the Bitcoin price to today.
But that's why it's all going to Ethereum and to smart contract platforms, because so this is, a matter of a lot of debate, that there are people like a Michael Saylor or what's his name at Twitter, Jack, I forget his last name, but that they're Bitcoin maximalists. So they regard everything besides Bitcoin in the crypto space as being this kind of corrupted altcoin, that is somehow it's taking away from Bitcoin and it's tainting the purity of the idea of Bitcoin. But the fact is that Ethereum and everything that is imitating it right now is that was a proposal, to bring smart contracts to Bitcoin, to make Bitcoin a smart contract platform. And it was thoroughly rejected by the Bitcoin community. So people like Vitalik Buterin and others, they said, well, we'll just build, not another cryptocurrency that we can build smart contracts on. And so that was the birth of Ethereum. Now, what had happened prior to that launch, which was in 2015, was there were a lot of, like in 2012, there started to be a lot of, and even 11, there started to be a lot of altcoins like Litecoin, and even Dogecoin came down in like 2014 and so on as a joke to make fun of cryptocurrency. And these were, most of them were just like a money grab, basically, or they were like just trying to take advantage of, people that felt like they had come in too late. They wanted to buy something at 23 cents instead of at $230 a coin, and like Bitcoin was at the time. And so they started their own thing, and a lot of it was a money grab. It was very distasteful in some ways, and so a lot of people in the Bitcoin community became very opposed to that kind of thinking. And but the problem is many of them never let go of that thinking when things really did change. And they didn't see value in something like Ethereum. No, some of them have. I'm not saying all, but just the maximalists, the people that have stuck in that mindset, they've never changed their mindset, and they always find reasons why it's a bad investment, or it's a bad thing, a bad coin, or something like that, or it's not as good as Bitcoin. Whereas I see it as they don't even compete. It's kind of like coffee versus Coca-Cola or something, or it's like Italian restaurant versus sushi restaurant. I mean, are you really trading off one versus the other, or are they something totally different? They're different. They do different things. They have different functionality. And in my view, the value of Bitcoin is its simplicity. It's not trying to be all these things. It's not trying to be a new financial system or anything. It's about storing and transferring value. That's it. It does that one thing, and that's all that it does. Whereas Ethereum wants to be, and maybe could be, I'm not saying it is, but wants to be and could be an alternative financial system that is decentralized, that really takes the vision of someone like Friedrich Hayek, or people later like Nick Szabo, who dreamed of the idea of denationalizing money and so on. But I think they do it in kind of a corporate friendly way, at least in the Ethereum world. And that's where the fight is right now. Is there are corporations that are really eager to get involved in crypto, but there are these regulatory uncertainties, and it's made them somewhat hesitant. But they're still getting involved. I mean, you've got Visa buying CryptoPunks. Snoop Dogg ends up being a huge NFT collector, and and other celebrities, and I'm not saying that and actually I wouldn't it's easy to say, well, this is a sign of a mania. On the other hand, I mean, hey, Snoop Dogg, for whatever you want to say about him, has been a very successful businessman.
Well, I'm sure he'll sell his NFT collection to the bag holders, who are not going to be as successful as he is. But
well, of course, but I'm just saying, and he was late to the game, but still he's made a profit on things. But he built up a huge following on Twitter before anybody even knew who he was, and they were following him just because he'd say, I jumping in on this project or that project, and nobody knew who he hadn't revealed himself at that point. But it was just this last week that he revealed himself. He's like Cosimo de Medici or something like that. But he ends up being a significant collector of some of the more prominent sets. But the thing is, I think that there's what the thing that people can confuse with mania, which is maybe it's a sign of it, but I think it's more of there's just a lot of creativity and experimentation that's happening on platforms like Ethereum and competitors. I don't want to exclude others, but the experimentation is about discovering what works, and it, something, a new project can be built and executed, a new financial product or a new art project can be built out of nothing and executed and launched and made successful with a very small insertion cost compared to what it takes, like a bank to create a new financial product, or what it takes a gallery in previous time to launch.
But the biggest issue with banks creating new financial products is liability, lawyers, regulations, etc. Crypto doesn't have much of this in the way, so that's slightly
well
different.
and guess what, I know that if I make a mistake and I lose money, or I give my money to a scammer instead of a legitimate site, I'm shit out of luck. I've lost the money. I made a mistake, and it's only on me. So, and this is, one of my beliefs is regulation, very light regulation can be good, like prosecuting true fraud and so on. But in many cases, regulation makes people stupid. It gives people an excuse for stupidity. So they never have to become smart. They never have to question, well, 12% return, that's pretty high. I wonder if that's a scam or not. I'm going to do some research. I mean, if you know that if you give money to the scammer, you're never going to get it back. It's gone. 100% gone forever. They're probably in, freaking Moldova or something. How are you going to track them down, even if you wanted to? And who's going to go arrest them? Who's going to put them in jail? Who's going to bring them to trial? It's never going to happen. They're gone. It's gone. Your money's gone. And so so you have to be 100% on top of things. Before you invest, you ask like 50 people, is this legit? What's going on here? You go to their Discord. You look to see, does it look like a scam, or it's just like a, false thing that's put up, or people posting things that aren't real. And you okay, this is legitimate, but this other thing, it looks totally like some scam setup. And you become smart. You have to become an investigator and check these things out. There's a cost to getting that 12% return or whatever it is. You don't get it for nothing. You have to do a lot of research, and it's not just free money lying around. So so I am fine with not being protected. Because I'm willing to take the time and do the research myself, knowing that risk exists. But it's made me, everything I look at, I presume it's a scam before, I'm persuaded otherwise. I just assume it's a scam.
Speaking of scams and innovation, depending how you want to look at it, Dogecoin was in the news this week, because the CEO of AMC, Aaron, actually tweeted that he has created the Dogecoin poll, and he has received the most reviews or reads, retweets ever for his tweets. He asked if AMC should accept Dogecoin, and out of 40,000 votes, 77% said yes. So now he's trying to figure out, he said, we need to figure out how to do that. Stay tuned. So it seems that Dogecoin has become the most popular coin by a huge margin. And so now AMC is trying